Hey guys, Dave with Moneyology here. Hope everyone is having a great day, great Friday, had a wonderful week. This is April 1st, 2022, and this is the weekend market review. We're going to try things a little bit differently here with Moneyology. Now that we've converted to Patreon and we've added a premium Twitter feed where we're going to post specific investment ideas based on our charts, based on our analysis for our private audience. That's available through Patreon. You can subscribe at Patreon for $10 a month to get access to that Twitter feed. Just shoot me an email once you've done that with your Twitter handle. Follow me on Twitter and I'll follow you back. And there you go. But these weekend market reviews we're going to make available to the public audience every single week. Thanks to your support, and then we're gonna all the other videos will remain premium, precious metals, uranium, commodities, everything under the sun. And feel free to send me a request or two about video topics and watch lists that you'd like us to review. So without further ado, let's dive right in. Starting, and again, we're going to do all of these. We're going to do all of these from a weekly perspective, and starting with the S&P futures here. So we are breaking out of a bullish flag. Now we've got a upward sloping 9-week moving average. That's that red line. However, what very often happens is when MACDs approach zero and you think they're about to cross over, then they create another dip opportunity. Now, it didn't happen here back when this happened back in March. I think this time is different. So what I think might happen is might have another 1 or 2 more weeks of positive price action, and then potentially we can roll over for a multi-week pullback, potentially to the 4,300 level. Ultimately, I do think we'll tag the lower end of this trend line at some point this year, around 4,900 or so. So we'll be watching closely, but right now the markets look pretty good, and we'll go through the individual charts to see what I mean by that. Here's another view, the SPX. I do think we will probably make another push higher towards that 4,700 level on this leg higher. But ultimately, if we cannot pierce this 58 level, which is that previous breakdown point right around these levels, we're likely going to pull back. So we'll be watching this closely. Now, when it comes to the VIX has broken down. This is a bearish flag breakdown here, and something we've been talking about for a while. Now, that doesn't mean it can't break back above these levels, but so long as it's below this 25 level right now, I think that the edge goes to the bulls, the equity bulls, for the time being. S&P stocks above the 200-day moving average. So we've had a nice little run here, but a pullback, again, wouldn't surprise me. But look at this. The MACDs have crossed above zero, so that's a good sign. And I would like to see more consolidation around these levels and ultimately break this downtrend, which is in the end, it's a bullish flag, but it's still a downtrend here. Nasdaq Futures. So we had a bit of a pullback off the highs, which is understandable. A number of resistance levels right now, the 18 and 34-week moving averages serving as that resistance. And also notice the lower volume right now that's coming in. So we'll have to see if this move is legitimate. And one of the ways to do that is it has to defend this trend line. If it defends this level, then I think eventually it starts moving higher again. I was looking through a lot of individual NASDAQ charts, and there are a lot of really constructive charts out there. So as we'll see among the mega caps as well. Here's the Qs, same sort of story. It needs to consolidate here between roughly 358 and 370 here for a while before either pushing higher or retesting this support zone. Volatility on the NASDAQ continues breaking down, lower again on the week, about 5%. So long as these levels are breached, you're likely going to see further price appreciation in the NASDAQ. The MACDs are bearish on the VIX volatility, and it's below the 50 RSI level. So I give the edge to the bulls for the time being. NASDAQ stocks above the 200-day moving average, still in a downtrend, so we want to see this break above 40 before I can say we're back in a bullishly controlled direction. Right now, I think we're kind of in no man's land, bouncing between roughly 4480 and around 4600 to the upside. Russell 2000, so this one broke out of its bullish flag And so I think the Russell is going to start really outperforming here. Notice the MACDs have broken above zero here. That this is the only one of the major indices that's happened. It did not happen in the Nasdaq. It did not happen in the S&P, but it did happen in the Russell. So that's quite interesting. Here's a Russell 2000 ETF. Again, it's consolidating, and I think it's going to push higher towards its 235 level as it breaches this 50 RSI level. Here's the Russell value. So Russell value is struggling right now with this upper bound or lower bound of this uptrend that it broke down from, and so this needs to be recovered and soon. Otherwise, it's potentially setting up for a bearish flag here that breaks lower. So we'll be watching to see which direction this goes. Russell 2000. So this is also very interesting, setting up very nicely for the bears to break out, and it didn't. And now this rounded bottom is breaking down. Now this could be a little bullish flag here, perhaps setting up a cup and handle. If it breaks above 44 on the Russell volatility, then I get bearish equities. Until that happens, I think Russell is going to lead the way to the upside. Speaking of leading the way, well, notice what happened with emerging markets this week. We broke out of RSI downtrend. That's a big deal. This is the first time this happened since the start of this downtrend in 2021. So I would love to see some consolidation, but a break above 46 sends us back towards the 49 level and potentially eventually a breakout. China ETF is also nicely bouncing off this 30.9 Fibonacci level on RSI. And right now, nothing to write home about, but I do think this gap is going to get filled around 40 before any major resistance. So the ETF that I've been following closely are the Chinese Internet ETF, obviously led by Alibaba. Had a major breakdown on capitulation volume here, and it rallied, pulled back last week. This week had a pretty good consolidation. RSI is making higher highs and higher lows. I think that the Chinese internet stocks are a buy here, and I would, if I were interested in the sector, I would be accumulating here in tranches, because I do think it's eventually going to break out above this 40 zone and make a nice run. Alibaba looks to me like it's potentially creating an inverse head and shoulders with one shoulder here, kind of the head, and potentially carving out another shoulder. But above 121, this is a strong buy. Notice RSI is creating a higher high here versus the previous peak around 120. So right now, I like what I'm seeing in Alibaba. Even though it pulled back some this week, I think it's going to be a good buy here. Hang Seng, not really liking it here, but nevertheless, I think it is starting potentially a move to the upside here, along with some of the other Asian equities. One of those are the Korean index, the KOSPI, the South Korean index, is carving out a bottom here, and I think it's at a minimum going to test this upper end of this boundary around 2,900, and likely going to break out of this bullish flag for a multi-week, month, possibly year run. So, a lot of folks are talking about recession, but I tell you guys, when I see these bullish flags, I just don't see it for the time being. One of the strongest emerging markets is Brazil. We've been covering this ever since this breakout of this bullish flag. This is what I'm talking about. When you get a bullish flag breakout, then you've got a 9-week moving average crossing over above an upward sloping 18-week and a now upward sloping 34-week. Soon the 18 is going to cross over, and you've got a lot of support here. And I think Brazil is a major bullish trend here. So kudos to Brazil. Semiconductors, so they pulled back on the heels of AMD's downgrade, I think, by Barclays earlier this week. So perhaps a little bit more consolidation. The semiconductors are back below the 50 RSI level, and although the MACDs are moving higher, it's going to take some work to break back above that 3,500 level on the SOX index. Internet Fund, so that's Google, etc., is making higher highs and higher lows, and RSI is starting to perk up. MACDs are moving in the right direction. So while it's not out of the woods yet, I do think that above 197 to 200, this becomes a very strong buy. All right, let's look at some of the major mega caps. Alphabet breaking out of its bullish flag, consolidating some this week. I think it's moving higher, probably towards 2,900. possibly towards 3,100 here. And who knows how far above that when earnings are announced in a couple of weeks. Facebook, Meta, also a nice kind of short covering bounce here. If it can break back above 235, and that was our short-term target. So this has been a great move out of this kind of bullish downtrend here, bullish flag downtrend. Once that broke, a lot of shorts had to cover, and now you're looking at a potentially back test towards 250, and then potentially creating another bullish flag and an attempt to move higher thereafter. So while I'm not a fan of Facebook based on this chart, there's just too much resistance. I do think that Facebook is ripe for a breakout here if it clears this roughly 36 level on RSI. Taking a look at Amazon. Amazon broke out of its downtrend, bullish flag downtrend, bottomed here around 2,800, broke above the 50 RSI level. The MACDs are in bullish territory. And although this week was a bit of a shooting star, I think that Amazon's on its way towards 3,700. Break above that, and Amazon's going to be starting a major uptrend. So I like Amazon a lot here. Apple breaking out of its bullish flag here as well. So there is some supply, overhead supply between 175 and roughly 185, but I think Apple eventually breaks out and moves towards that 190 to $200 range. Micron Technology, we added this to the list this week. So Micron had earnings released this week, and by all accounts, they were good earnings. However, this is what happens when you have a stock that has a lot of overhead supply. There are a lot of sellers out here, and sure enough, we tested this upper end of this boundary and broke down. This is not a buy until it breaks this bullish flag downtrend around 82. And I think it's going to happen, but let's take a look and wait and see for the MACDs to start moving in a positive trajectory. AMD was looking strong this week, but these downward sloping moving averages served as resistance. So AMD is not a long-term buy until it breaks roughly 25 here to the upside. Notice how 50 RSI level served as resistance this time around. NVIDIA, bullish flag already broke out, so this is in buy mode. And this might consolidate here for a little while, allow the moving averages to catch up. But NVIDIA, so long as it stays above this upward sloping now nine-week moving average, the red line, I think NVIDIA is a strong buy, and a break above 281 is going to take shares much higher. Tesla, beautiful bullish flag breakout. I think Tesla's going to well past 1,300 here on this run. That doesn't mean that there won't be pullbacks along the way. You know, you've got some gaps here that potentially get filled. But I would be a buyer of Tesla on weakness and would not sell it until it breaks below this upward sloping red line here, serving now as support. I was saying earlier, a lot of the ARK underlying holdings are looking quite attractive right now. And while I would like to see some consolidation, notice that ARK, it looks to me like it's about to break the MACDs. And so above 74, this can run really nicely towards 90, potentially retest this 99 level, at which point I would look to sell some of those higher growth names. But it's in buy mode. Berkshire Hathaway, I think it might pull back here some. I mean, this looks a bit extended. In fact, there's kind of negative divergence, a substantially higher high. Momentum is really not kind of jumping like it's making new momentum highs. And frankly, how could it? It's so overbought. So I think Berkshire is not a buy right now. I think it could pull back towards that 3320 level. Frankly, alongside interest rates. We'll look at those soon. The developed market ETF, VEA, looks good. RSI is back above this yellow line and sloping higher. I think VEA is looking at a test of 51 to the upside. Financials kind of breaking down here. Interesting, right? So when you would expect to see financials breaking out potentially with interest rates moving higher, but I think they're kind of financials are pricing in lower interest rates rather than higher ones. And frankly, this could be a result of the yield curve inversion. Financials are not good investments in a inverted yield curve. European financials, they're actually acting pretty strong right now. So this has been a good week for European financials. RSI looks like it wants to break above that 50 RSI level and move higher. However, there's a lot of resistance here among these levels, right? There's a lot of supply here, so I would not be chasing this, but you can look at individual names to be sure. Transportation sector was down quite a bit. This is a shooting star. That's quite concerning. This is what I was talking about when the MACDs are moving higher and they roll over. Typically, when they roll over, they do like a short rollover, not a deep correction. So perhaps a multi-week pullback here of value stocks is in the cards, and growth is back in play. Home construction continues to break down here. That's a long-term negative sign. It's not a problem in the short run, but in the long run, if home construction stocks break down, that means home prices will eventually fall, which is great for the consumer, potentially those who want to buy, but it can really hurt the economy in the long run. So we'll keep an eye on this one over time. Biotech is bottoming right now, and this is a very strong buy in my opinion. I'm seeing a lot of great charts. You've got kind of this. You've got one shoulder. You've got one head here, and now you're creating another shoulder here. And I think that biotech is going to be a very strong buy. The MACDs have broken out, and look at the volume here. A lot of green candles, right? So we'll be watching biotech more closely over the next couple of months, and we'll be posting charts on our private Twitter feed for our subscribers. Regional banks are breaking down, potentially breaking down here. This is kind of like a bearish flag, so I could see a breakdown here towards 60. I would stay away from banks right now. Microcaps, though, look to me like they want to break out here. Above 131, this becomes a really strong move towards this magnet of 145 to the upside. So I'm a buyer of microcaps. I think it's going to make a good run. But I will say that microcaps breaking out tend to happen towards the later parts of the economic cycle. So bulk shipping, we covered shipping earlier this week. There are some really good opportunities in the shipping space. So long as shipping rates stay along these levels, then shipping sector is going to do quite well. All right. So the 10-year Treasury, a lot of folks are talking about the 10-year Treasury breaking out. I think it's facing stiff resistance here, and I think it's about to break down. I pointed out how we had negative divergence here with a higher high, but versus the previous high at 174, but a lower high in momentum. That's bearish, and I think once that breaks lower, notice something like this. If you draw this line here, this kind of is a back test of this trend line, and now we're likely going to see several weeks of consolidation and potentially a pullback all the way down towards 2% here on the 10-year. What does that mean? Well, that means better for growth stocks, worse for value, and I think you're going to see some changes in the direction of certain segments of the market. So the corporate bond, intermediate bond ETF, I mentioned that this is some level of support here, and it did rally this week up above about 1% here. But I think there's a really interesting opportunity in long-term bonds as a trade. So this is the intermediate term. But when you look at, we're going to look at the TLT in a second here. In fact, let's move it over here. TLT had a really nice move up about 3% on the week, and I think this bullish flag is going to break out to the upside soon. And what that means is you're going to see a rejection of yields, and I think a nice rally in long bond instruments. So I like what I'm seeing here in the bond world right now. Oops, we did that. Okay, high yield bonds are consolidating here. We'll see which direction they go, but look at the RSI creating higher highs and higher lows. I think that this is suggestive of a breakout in high yield bonds. And sure enough, if yields drop, I think high yield bonds are going to do well for a while longer. High yield index option adjusted spread. For those new to this video, this is the spread of junk bonds, yield and junk bonds versus treasuries, and this is breaking down. So the spread narrowing is a very good sign, and so for equities. And so I think that, again, this is a good sign for credit markets if this downtrend is indeed broken. And now we're going to see a crossover on the MACDs. Here's the bond volatility index. It's certainly broke out, but we're creating lower highs and lower lows, and I think that bonds are going to start moving to the upside soon. Notice this is the VIX of the TLT. This one's also potentially breaking down here. Notice lower high on momentum on this attempt at a breakout. So I'm actually quite constructive right now on bonds. Now, what does that mean for the general economy? Here's another view of another long duration bond. Notice the higher divergence, the RSI moving higher here, and if that's the case, then we've got positive divergence, and we're probably going to move to the upside soon again in bonds and lower in yields. U.S. dollar, I think the U.S. dollar is also breaking down right now potentially. It's consolidating here, but notice lower high, lower low in momentum, and I think the U.S. dollar can potentially roll over here. What's not rolling over and what's extremely bullish is the Uranium Trust. We've obviously been covering uranium probably longer than most for the last 3 years here, certainly since 2019, if not 2018. And many of you have rode the wave and buying Encore and UEX and GoVX and Global Atomic at 80-90% cheaper than where they're currently trading. So it's been a great run, but I think it's just getting started. This is a major breakout, and this hammer pattern on the weekly is confirmation of the uptrend that I think just continues. RSI, so long as it stays above the 69.1 Fibonacci level, will move higher and higher and higher. Here's a monthly chart. This is just now breaking out. So I think we're in the very early innings. However, the equities have not really participated all that much of late, other than perhaps Cameco. Notice 3 lower volume candles on the URA. So it's consolidating, but consolidating still with bullish price action. The 9-week moving average continues to consolidate higher, and that's a very good sign. And so long as price doesn't break below this red line, we are very much in a bull trend. So here's the URNM, also bullishly flagging, and again consolidating above these moving averages, likely headed towards that 99 level relatively soon. Over the last couple of weeks, the rare earth metals have done really well, bouncing off the lower levels here, and continue to move higher for the last 3 weeks. I like that the MACDs have crossed, and so we've covered some rare earth stocks like Texas Mineral Resources and MP, which is a larger cap. A sector that we've been covering for a while in these videos is the marijuana ETF. Longer term, this is a very constructive cup and handle that looks to me like it wants to break out, but we'll see next week, because we had a breakdown, not a breakdown, but a rejection of this $6 level, which is the level I've been talking about for a while. But it is with higher momentum. So on the previous peak at $6, momentum was much lower. So I do think marijuana is going to break out. We're going to be posting some charts throughout the week of names in the marijuana space that we like on the premium Twitter feed. So follow us if you'd like. Copper continues to consolidate bullishly. I think copper is going to break out above 490. Copper juniors are just on fire right now. I do think that there could be a pullback here, but this is a long-term cup and handle that we broke the neckline around 40 and off we went. So can it consolidate here, create a bullish flag all the way down towards 40? Absolutely, but this is a extremely bullish candle, and we'll be watching the 69.1 level. This is where we last rejected here with the shooting star. So I would expect some resistance along these levels, but so I wouldn't be chasing here. But if it does break out above 50, I'd say 48 on the COPEX, then potentially a chase is worthwhile. Gold. So gold continues to break out of this long-term cup and handle here, and it seems like it's bullishly flagging again, and bullish flags tend to break out. However, RSI is decelerating here, which I don't like to see in an uptrend. So we'll have to see if this can snap back higher. Gold miners, the large caps, continue moving higher. 1, 2, 3, 9 out of the last 11 weeks moving higher and closing at the highs of the week is a good sign. So you want to see the gold miners continue moving, creating higher highs and higher lows. We're approaching previous resistance at these levels, but RSI is higher along these levels. So even if there is a pullback, so long as it's above this red line, this upper sloping 9-week moving average, we are going to continue chugging along higher. Gold Junior, same sort of story. Above 48 is a very strong buy with a target of 55, followed by a target of 63. So I like what I'm seeing there. Silver. Silver continues to consolidate, creating a little bullish flag here in this consolidation zone. So I think silver probably makes a move towards that 29 level relatively soon. But RSI is creating potentially higher highs and higher lows. So we got to be cautious about that. Silver miners, the larger caps are starting to gain some steam, but gosh, it's just, you would expect them to be at much higher here than they are trading right now. We are approaching that RSI resistance of previous breakdown. So you extend that out, we're kind of there. So we'll have to see. Is silver going to break through next week and make a move towards 40, the silver miners, perhaps even fill this gap here, or is it going to eventually roll over? I want to see continued higher highs. But again, so long as it stays above this red line, we are bullish. And notice we had another hammer pattern. But look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 straight weeks of positive price action. Perhaps it's a little bit tired. Notice again, where's the last breakdown? Right over here. This is where RSI is broke down. You extend that out, and this is where we're struggling right now. So if it can break above that level, be very bullish. If that gets rejected, then you want to exit certainly your short-term positions. Platinum, I don't like the way platinum's trading, to be honest. This is a shooting star. Is this just a back test? That would be very bullish if platinum can break back above 1025. On the other hand, if it can't, I would be starting to get concerned. Palladium, really bad shooting star here. We had 4 straight weeks of downside, but we rallied here with a little hammer pattern. If it can hold that 50 RSI level and follow through back above 2400, that would be bullish. On the other hand, if it continues breaking lower, I would stay away from platinum and frankly palladium. Crude oil. So right now it's flagging bullishly above the previous uptrend here. So long as it stays above 95, 96, bullish. But on the other hand, RSI is creating a kind of a head and shoulders here as it broke below the 69.1 level. So potentially a couple more weeks of downside wouldn't surprise me at all. But on the other hand, large cap energy continues to kind of tread higher, but it's struggling here above the 69.1 level to maintain that momentum. So if this uptrend breaks, then I think we're looking at a retest of this 9-week moving average, currently at 73. If that level breaks, then you exit the position, certainly that of a trade. Small cap energy continues to do well, and it's almost tagging our $11 price target. So this has been quite a run from the lows when we started covering it around $3. There's been some really nice 3x upside here on small cap energy. Frankly, I would have expected it to do better given kind of the risk in some of those, but hey, I'll take it. Steel continues to break higher, and steel is just another one of those commodities that you want to own right now, similar to uranium, similar to copper. It's hammer pattern off of support. It's breaking higher. So steel continues to be a buy. Bitcoin, so far right now, Bitcoin is struggling at its 34-week moving average. But if it breaks above 48,000, I think Bitcoin continues to move higher, probably towards that 57,000 level, which is the previous resistance level. MACDs have crossed bullishly. Ethereum, bullish flag breakout. I think Ethereum's headed towards 4,000 at a minimum, and I think the MACDs are about to break out as well. So overall, here's what I'm seeing. I'm seeing a switch from value back to growth. I'm seeing a lot of momentum trades back into the market, and I don't see the market selling off sharply anytime soon. That can change several weeks, perhaps months from now, but I do think there's a lot more upside, particularly in tech and commodities, and we'll see, and as the US dollar weakens. So we'll see what happens there, but I would stay away from financials. And if you're looking at a more conservative play, getting into bonds here, long dated bonds might make a lot of sense. Emerging markets also look good. Anyway, guys, I would appreciate if you can check out check us out, patreon.com/moneyology. Either the monthly subscription for $37 a month USD gets you all these videos plus the private Twitter feed. And then $10 a month doesn't get you access to the private videos, but it does get you access to the private Twitter feed where we will post probably about 20 positions a week in terms of really nice setups. So anyway, have a great weekend. This will be posted Saturday evening. Right now it's Friday. And to give everyone a little bit of a break. And we'll be in touch on Sunday. We'll do a uranium video review. Take care.